Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. As you know, probably yesterday's Federal Reserve statement hasn't brought any clarity on the markets. So they in fact have said nothing. They just said that the further policy will depend on the data that we will get from the economy, and if we will see that the economy still stands on a moderate speed of the improvement, well, then the policy will remain intact and rate rising will continue. But if we will see that the economy will become weaker, then the policy could change. So that's why, in fact, on the forex market we haven't seen any pressed collection except maybe New Zealand dollar. So the statement from the Central Bank of the New Zealand was really is the opposite to the Fed Reserve. So that they really has given the strong hint that the New Zealand dollar should become weaker, and the high value of the New Zealand dollar is painful for the economy. So they have sent the clear signal that they will adapt the policy for further New Zealand dollar weakness. And since we have long-term bearish setup on the New Zealand dollar, if you do not remember it, so you could read our recent weekly research on the New Zealand dollar or find the video. So I just remind you that we have almost confirmed bearish stop grabber on the monthly chart on New Zealand dollar, and we have great bearish butterfly on the weekly chart. Both of these patterns suggest the taking out of the current lows and further drop. Last time when we have discussed on the New Zealand dollar, we said that market should turn to some upside retracement because it has hit significant level of the bearish sold. And right now the retracement really has started, but right now it seems that it's come to an end. So the downward action should reestablish probably soon, and we should keep an eye on the New Zealand dollar, and probably we should start to search the proper moment for taking the short position. We again will not talk on the euro currency because the situation absolutely hasn't changed there. So that's why today we will take a look at the Japanese yen. So as you understand, we're tracking a lot of different patterns and setups on the different major currencies, so we just can't drop it out, and we should continue to watch of them because the situation changed rapidly, and we need to take care about our trading plans on the different currencies. So right now you see the weekly chart of the Japanese yen. In general, guys, we have currently bearish setup on the United States Japanese yen, United States dollar Japanese yen currency pair. So it means that we have the bullish setup for the Japanese yen. And this setup comes mostly from two major points. The first point is based on the global fundamental situation, on the rising degree of the uncertainty, on geopolitical tensions, and weakness over the overall economy, and lack of inflation and drop on the commodity prices. In such situation, the demand for the safe haven currencies usually increases. This is not stands in relation only to the Japanese yen. This is has a relation to the Swiss franc, so to the United States dollar. So usually these currencies appreciates when the situation becomes tough in the world. That's why we think that this will be a supportive factor for the Japanese yen. Another factor comes from the policy of the Bank of Japan. So you know that they follow the really of the huge scale of the quantitative easing program on investing in an economy reserves and buying the bonds. So they try to reduce the value of the Japanese yen. We know you probably know why they do this. So you do not need probably any explanation of that moment. But in recent time, guys, despite the all forces that Bank of Japan applies to national currency, to the domestic currency, trying to make it weaker, it's not quite working. So on today's meeting on the Bank of Japan, investors expect that the further steps of the easing will be provided, and that will probably lead to some dropping of the Japanese yen. But at the same time, investors right now starts to look at the suspicious and the doubts on whether really this quantitative easing program works, and whether really the steps that right now are taken by Bank of Japan really will lead to some rising of the inflation in Japan, and really will trigger the weakness of the Japanese yen. So since this financial policy has started really far, a long time ago, it's probably more than a year, Bank of Japan is trying to trigger the inflation. But it's really not some really feasible results of this policy. So that's why the pressure is growing that investors will disappoint in this policy, and Japanese yen will start to become strong again. This is two moments that fundamentally could impact on the value of the Japanese yen. Technically, guys, you probably should remember our analysis. Since overall we have the bearish pattern, long-term pattern. This is head and shoulders on the weekly chart, and also we have the double repo sale on the monthly chart that suggests a significant drop lower. But this is really on a big scale. On the shorter scale, we said, take a look, market has hit significant support. So this is oversold on the weekly, major fib support and neckline. And we said some bounce should follow, and really it is going right now. It has happened. How far this bounce will take place, here we can't say. But for the head and shoulders pattern, two significant upward retracement will be negative sign. For example, if market will climb right to the top of the right shoulder, that will be warning sign that setup could fail. That's why retracement, normal retracement, following the logic of the current market, should over somewhere in this area, slightly higher, slightly lower, but right at this area, because this will be acceptable as a reaction on the just strong support. But since market should be, as it shows, if it's really bearish, it should not show too deep retracement. Market should prove that this action is just a reaction on the strong support. It's technical bounce, and then should return right back down. If this really will happen, then it's okay, so it's normal. If further action will follow, that will be the warning sign. That's why currently we stand at a very important moment for the Japanese yen, especially at the eve of the Bank of Japan meeting, because it really could shake the value of the Japanese yen in a short-term perspective. So that's why for us what's most interesting will be what we have on the intraday charts, on the daily and on the intraday. On the daily chart, guys, we have our double repo buy pattern that has triggered this upward action. So if you remember this, our dealing with this double repo was dramatic, since initially we have expected here double repo will be confirmed, but instead of that, market hasn't confirmed it, since you can see it's closed below the 3x3 moving average, drop lower, and only after that has closed above the 3x3. So this is in general the positive sign for the double repo, when the new lows appears and then market confirms the double repo. And action with the double repo looks absolutely normal. So after that, market has skyrocketed up. The target of the double repo is the 50% of the whole frost down. It's 1976. Also, guys, take a look. This will be daily overbought, and that will be weekly pivot resistance run. So nice area where market could finalize the retracement up. Also, guys, take a look at the weekly chart. You could see here an area of the potential resistance, here an area of the potential resistance. So market will protect this consolidation from the price returning back inside of it. So that's why this area is an area where we will be watching for possible entering on the short side, if you still think that the Japanese yen is bearish market, and where we will be watching for possible reversal patterns to the downside, because that is logical finish for retracement up, if market is really bearish. If it is not, then we probably will see that market will continue to move higher. So what else we have here? On the 4-hour time frame chart, that is by the way the butterfly, how it started. So here we see the consolidation that hints on the possible another small upward bounce. It's okay because we expect slightly higher action for some pips higher to the 50% resistance and to this resistance area. And take a look, what's more interesting than that on the hourly chart, market indeed is forming a reversal pattern. That could be the butterfly that has the target 1966, almost at the same area 1976. Just this level stands just 10 pips higher than target of the butterfly. So here we also have the bearish divergence, as you can see. So that's why, guys, different patterns confirm that market should reach this area, and hence until the end of the current week, today, tomorrow, as a result of the Bank of Japan meeting, we will be watching for reaching of this area first, and then we will see how market will behave here. But the moment where we should decide whether we would like to take this short or not is coming and stands very close. Market should give us the clear sign, is it really bearish yet, or something has changed, and we probably should get declared right around this area.